If you invested $100,000 in the safe 60/40 portfolio 10 years ago, you'd be happy with your returns. But what if I told you that by adding just 2% of something that everyone called a scam, you could have doubled your total wealth? This isn't math for gamblers. This is the hidden formula that the world's largest asset manager, BlackRock, is now using to stop their portfolios from bleeding out. Now, let's get into the secret sauce that makes this strategy so lethal. In September 2025, BlackRock filed for the iShares Bitcoin Premium Income ETF. If you're a retail investor, this is your holy grail. Most people think Bitcoin is just a digital rock you hold and wait for price appreciation. BlackRock sees it differently. They see it as digital land. And what do you do with land? You lease it. This is the power of the covered call strategy. Imagine you own a high-value property. You could just sit there and hope the neighborhood gets nicer, which takes years. Or you could lease out the mineral rights to that land for a monthly fee. That fee is the premium. BlackRock's new fund does exactly this. They hold the physical Bitcoin, the land, and they sell call options to the market. When the market is volatile, when the price is swinging wildly, the value of those options increases. The fund collects that rent and distributes it to you, the investor, as a monthly dividend. Think about the genius of that. Bitcoin is famous for its volatility. Normally, that volatility scares investors away, but in this fund, volatility is the engine of your income. The more the market moves, the more premium they can collect. They've essentially purified the chaos of the crypto market into a consistent paycheck-style cash flow. For a retail investor looking for passive income, this changes the game. You are no longer just hoping for the moonshot. You are participating in the ecosystem. You're getting the upside potential of Bitcoin's growth, plus a monthly cash distribution. It turns Bitcoin's biggest weakness into your greatest financial strength. Let's break down the math. Why 1 to 2%? Why not 5 or 10%? In financial modeling, this is called the optimal diversification point. If you have $100,000 portfolio, 2% is $2,000. If the asset goes to zero, which, let's be honest, is the fear, your portfolio drops by 2%. You are still in the game. But if that 2% doubles, triples, or quadruples, it adds an outsized return to the bottom line that stocks just cannot provide. BlackRock isn't a startup. They manage the equivalent of the entire US housing market. When they put $69 billion into IBIT, they aren't guessing. They're performing stress tests. Their internal data shows that Bitcoin has a historically low correlation with traditional S&P 500 tech stocks during certain inflationary cycles. Look at 2025. Institutional holders of Bitcoin saw cumulative returns north of 26% compared to the standard 6 to 8% annual return of a typical mutual fund. By allocating just 2%, BlackRock isn't trying to replace your portfolio, they're supercharging it. They're looking at the balance sheet divergence, a fancy way of saying that the world is printing money at an unprecedented rate. When the giants move their money into Bitcoin, it isn't speculation, it's a defense against the dilution of the dollar. When you see $14 trillion moving, you aren't just looking at a trade. You're looking at a structural shift in how the world defines safety. So, how do you actually apply this? You don't need a Bloomberg terminal. You don't need to be a hedge fund manager. You just need a strategy. Step 1. The 2% rule. Keep it disciplined. This isn't a get-rich-quick play. This is a stay-rich play. If you have $50,000, keep $1,000 in Bitcoin. It's enough to move your returns, but not enough to hurt your sleep. Step 2. Use the institutional vehicles. Avoid the Wild West. Don't worry about cold wallets, lost keys, or exchange hacks. Use iBit. It's liquid, it's regulated, and it's backed by the world's most powerful financial institution. You buy it exactly like you buy Apple or Microsoft stock. Step 3. Wait for the yield. Keep your eyes on the premium income filings. When that hits the brokerage menu, it's time to move from growth to income. This is the future of investing, the intersection of crypto growth and traditional dividend yield logic. BlackRock didn't go all in, they went smart. They captured the upside while keeping the downside trapped behind a 2% wall. That is your blueprint. Capture the growth, protect your wealth, and stop trying to beat the market, just mirror the people who are the market. If you want the exact calculator I used to model this 2% strategy, I've linked it in the description below. It's free, it's automated, and it'll show you how this 2% allocation would have impacted your returns over the last 5 years. Subscribe if you want the next deep dive into how institutional giants like MicroStrategy are holding 3.26% of the global Bitcoin supply. We're decoding the secrets of the $14 trillion whales. I'll see you next week.